Welcome to Markets Now. I'm Michelle Rook with Allison Thompson of the Money Farm. It was a lower day in the ags with the exception of the cattle market, but grain seeing some more pressure. And Allison, boy, it just feels like we continue to remove weather premium. These crop conditions are still pretty high historically, aren't they?
Yes, correct. We were talking weather last week and we were pushing against resistance levels, which really made us think that maybe we were going to see a recovery rally. But unfortunately, it fell apart all within about 48 hours. We gave most of that weather premium back plus some in some of the grains. And again, that just has to do with updated forecasts and also crop conditions. This week, it definitely looks good. I mean, we did see a mixed bag of crop condition reports, but overall, historically good for this time of year. So obviously with that, record yields are still on the table and definitely a possibility. And it seems the market's putting that into prices.
Yeah, and you kind of call this the time of summer doldrums where we really don't have a lot of news to move the market, right?
Yeah, that's exactly it. It kind of gets its name from that. It's usually has to do with a seasonal slump in prices due to the economy and the markets and also the hot and lazy days of summer. And it's hot, that's for sure. It's definitely hot and humid across the Midwest, but it's not hot enough. So unfortunately, it just really took the momentum that we were seeing out of grains here recently. And we could see grains just kind of trend here or trend sideways, if not lower, until we do get some type of fresh news to spark something in this market. And there's definitely moving pieces, but until one of them really develops, it's going to be hard for this market to grab onto anything. It really wants some printed proof. Even with that, we've been watching these USDA reports on a weekly basis. They've been a dud. We're looking for a change in conditions. Those were a dud this week. We're looking for exports, export inspections, and they've been good. But we're not seeing any follow through with any rumors that we've been hearing of demand. We haven't seen any daily export sales come through. And at this point, given where we are, we need to see those be consistent and rather large to get the market's attention.
And unfortunately, the funds are short and they're pretty much in control in the driver's seat, aren't they?
Yes, they continue to be short. We did see them actually shorten up some of their short positions this last week, or they bought some back, lighten their load a little bit. But again, they still remain large net short, and those have been winning trades. And I think over the past 6 months, we've all been just patiently waiting for some time of a short covering rally or see them cover their short positions. But the funds won't do that without a reason. They won't just, liquidate them or get out or change sides just because. They need a reason to do that. And so far, we haven't seen anything come about to give them a reason. The weather potentially had momentum to do it last week, but again, that fell apart. So now we're kind of stuck onto those same headlines as far as getting them to move out. And we are going into month end here this week. So we might see the funds actually dress up some of their positions and maybe extend some of their short positions going into the month ahead, especially as we're seeing no headlines to really change anything starting the month of August.
No doubt. So where do you think we need to hold here? What are the next areas of support? I mean, could this thing get even uglier?
It definitely could, which is why we're keeping a close eye on our support levels. So for corn, we've definitely been seeing about a 20-cent range in both old and new crop contracts, that 3.90 to 4.10, and about that $4 should be good support to about 4.20. Those have been some pretty key ranges, but we're really starting to watch the new crop contract now, especially as that's coming at the top of everyone's minds with harvest coming around the corner and summer finishing up. So we've been watching that old low of 403, but we have been holding 405, which is really good to see. But if we were to break below those levels, I think the key point to watch will be that $4 area. That's kind of a psychological point that I think a lot of the trade has their eye on. And getting below that would definitely be detrimental. We could see another 25 cents lower. And on the soybean side, there too, we've definitely been trending lower. We made some new lows, to start the week. We gapped lower on Sunday night, and the trade's had a hard time coming back from that. Fortunately, though, on Monday, we did see the trade come back and actually close near the top of its trading range for that day, which is actually pretty impressive and actually does print a friendly technical potentially reversal on this market. We had a really long wick printed on the candlestick chart to the downside, but actually closed near the top of that range. So as long as we don't make new lows and take out that 1018 area on November soybeans, we could trend sideways here for a while before we actually do see the market turn and trend higher. So it's going to be very important that we hold that 1018 level. Otherwise, below that, we're going down to $10, and potentially that 1070 area or 970 area would be the next point of finding any type of support. And then on the wheat side, there too, they have been trending lower. Casey's had kind of an inside trading day here now, but we have seen Casey wheat make some new lows, and even spring wheat is trending really close to lows we saw a couple of weeks ago. Came within a penny of it, actually. So it's going to be important to, again, maintain those lows that we have in place. Otherwise, it wouldn't be surprising to see new lows being printed if those levels are breached.
Will we hold those at least until we get through the WASDE report and we get confirmation of bigger yields, or what do you expect?
Yeah, I'd really like to hope so. I would think that we're kind of waiting for some fundamental data to move the market one way or another. But until then, those support levels are definitely going to be key for holding at least where we're at. But again, it's right now we're just not seeing anything to really spark a move one way or the other. I have a feeling that we're finding trading ranges in all three major grains until we do get something new. So fundamental data dump on the 12th, it's a Monday even. So we'll have the whole week to digest that report. We've been kind of getting them on Fridays, and it kind of leaves a lot of unknowns with only 2 hours to trade those reports. And then we get a weekend in there, and then we don't come back till Sunday night or Monday. So this one will be very interesting because we do get the full week, but we also get farmer surveys as well for crop production. So those will come into effect too. So we could see some yield adjustments, production adjustments in this report. So it definitely has the potential to be market moving.
Do you think we'll get any acreage offsets if we see production or yield move?
Yeah, there's obviously diversified conditions all over the Midwest this year. Wet areas, dry areas. Some areas got hit by pretty severe storms here, even just recently. And we've also been dealing with even some hail in spotty areas up here as well. So it is going to be a debate, and it's an ongoing debate every year on how these are going to offset each other. And unfortunately, that debate isn't going to be going away anytime too soon. So I wouldn't be surprised if the USDA does compensate it from some areas to other areas, at least for the time being. But eventually we're going to get to a point where it can't be hidden anymore. And we've been talking about that for many years when we're seeing such different conditions. So honestly, we'll probably get some answers, but probably not enough as far as final production until we get later in the year.
And will we see more old crop trying to move into the market here as we get closer to harvest and have to clean out some of these bins, or when do you expect it?
Yeah, well, the time's really running out for getting some of that old crop priced. Typically it's not a very good strategy to be holding a lot of old crop going into the new marketing year, and that's quickly approaching as we get into the month of August. So on funds this last week, we did see the funds, like I said, lighten their short positions slightly, but we also saw commercials actually lighten their long positions, which means we did see some movement and some pricing being done with elevators and producers removing grain on this last rally last week. And that's a really good sign, but they're still long. So that tells me there is still a good amount of old crop hedges still remaining out there by end users. So we are going to still need to see some decisions being made here going forward. And when the market's aware of that, and I have a feeling that's likely weighing on things as well. But again, I've taken many questions here over the last few weeks here on what to do with remaining old crop. And even if you're behind on new crop sales, there's plenty of strategies out there to take advantage of this volatile market. We're seeing large swings on a daily basis. Corn can swing 10, 15 cents, same with beans, 15 to 20, and beans are swinging 20 to 30 cents in the day. And you can usually use those to your advantage and get some positions or some hedges on to at least protect your bottom line here as we move forward.
Right. Wheat market, when are we making some new contract lows again here today? At least KC Wheat did. So, do you expect we're going to continue to see pressure there and as well in Minneapolis, especially as we're getting close to harvest?
Yeah, we're really nearing harvest up here. I wouldn't be surprised to see some combines rolling here over the next week. And obviously, that does bring harvest pressure into this complex. Even though we are continuing to hear about some weather issues and production concerns, particularly in Canada, that's really caught the market's eye here this past week because they've dealt with some pretty hot and dry conditions. And we've been dealing with even the smoke from Canada here just recently with all the wildfires that were caused by it. So that might be another thing just to keep on the mind's eyes as Canadian production going forward, but they're even further away from starting to see combines roll. But definitely something to keep in the back of our mind, especially as we get closer to the end of the year on what their production actually feels like. And same with Russia and Ukraine. They've been another one that's been in the headlines, and they look like they're getting some relieving conditions here as well, which is probably just kind of feeding it here a bit on the lower side in both of those markets. But obviously, a lot remains unseen too. The path of least resistance is down, and harvest pressure, like we saw with Casey wheat, can definitely bring prices down.
Thanks for joining us, Allison Thompson with the Money Farm. That is Markets Now.